Hi all, this is Ben Parker from PFX Capital. We're going to look at diagnosing a price chart. I'm posting this video mainly because a friend who's actually learning the Forex market at the moment, mainly in technical analysis, was asking me, what do you do when you look at a price chart? What indicators you use? How do you know where to start? What do you do when you open up your charts? And I say to him, well, there's a few things really. I don't just generally concentrate on one. I will firstly, I personally like the MACD indicator. I'll firstly place that on my chart and actually see where it's situated. Is it above or below the signal line? Is it just about to cross, or has it just crossed? Now, as we can see this is the Euro Dollar Daily, and we can see that price has crossed, well, MACD has crossed the signal line, which, for number one, that's a bearish view. I'd probably tick that off my list. Say MACD is bearish at the moment. So just from there, I'd say we should be short. But obviously, we can't just base all our trading decisions just off one indicator. It has to be due to a few things, such as I'd also put at least 3 moving averages on my charts. SMAs, generally like the 40, the 55, and the 100. This not only gives me the direction of price, but also gives me kind of, I like to think as profit-taking levels. Now we can see that price has actually moved through the 40 SMA, which I call a breakout to the sell side, and it's also moved and closed below the 55 SMA. Even though price has moved back up, we see that probably is corrective, and we should definitely see price move down as direction has changed. We are in a downtrend here from what I can see on the daily. Now I also like to kind of take apart my chart with support and resistance lines, mainly trend lines, and as we can see, if we just draw a few on here, connect the dots up on the support and resistance, we can see that we have a nice, there's our nice resistance there, as we can see, 2 points joining. We can also see we can connect our supports up here. We see if we connect them 3 there, pretty closely. We'll just zoom in a bit here, and we can actually see there's 2 hits off the resistance. We can actually 1, 2, 3 hits off support. But the most important thing we can see here is we've had a breakout from that support, more or less directly in line with the 40 SMA. Now this has shown us that we have had a big push out from this main kind of slightly upward channel. Now this again would signal to me to be bearish. Even though we've got the 3 black crows coming up here, the candles, we're definitely in a downtrend, and we can see this corrective, even at a very good place to sell off here to get in at a better price, or even double up on the trade we already had coming in here. I also like to add another indicator, probably add a stochastic on there just to see where that's at. We can see that that's moved down, it's in oversold territory, which can also mean that we're still obviously short. As we can see here, it was long for quite a period of time and still stayed in the overbought area. So this could generally do exactly the same as stay in the oversold area for quite some time and trend downwards. Even though we've seen some fundamental data, especially on this week, saying that, obviously Ireland's getting the bailout, it's still not quite enough. We can still see Portugal and Spain having troubles there, which could even push the euro down further, which is adding in our favour. So we can definitely see, from what we've seen a breakout of the trend line support. We've seen a breakout of the 40 SMA and the 55 SMA. We can see that MACD has also crossed its signal line. We can also see that stochastic is in oversold territory. Now, what else can we see? Now, I also personally like using Fibonacci retracements. So let's just draw one on there, go from the bottom of that upward move to the top of that upward move. Now we can see the price has moved down, and we can see that it has actually used the 50% Fibonacci retracement line as support, and it's corrected and moved back up and hovered around the 38%. Now this can actually give us a nice place. We can see that it could just move up to the 38% retracement, and we can actually we should be looking as a target to actually cross back down and cross through this 50% again, which is now this support. What else can we see? What sort of profit targets can we take if it does start to move back down? Well, another tool for this is Fibonacci again, and we can also use Fibonacci expansion tool and literally use a projection, kind of link that from the top of that downward move to the bottom of that downward move and say that, look, we can probably see that will move up to around here, or could move from here, in fact. And we'll put our first, projection down at the 61%, but generally we're looking for a 100% projection on that. Now, as you can see already, just from a few minutes work, we've dissected that we've broken out at the moment. We're now in a downtrend. We can see it's broken through SMAs. We know that our indicators are in oversold territory or moving into the sell side of things. We've also projected where our moves will go. It will give us a nice probability. We can also dissect where our support and resistance is. So just from the technical analysis side of the view, from all of these things, we're looking to be bearish here. We're not looking to be buying any rallies. We're looking to be selling short. I hope this has been of some help to you. And obviously, again, if you do require any help or want to ask a few questions, you can contact us on our contact page. Thank you very much for listening, and we'll talk to you in the next video.